To remain updated with the latest business news, click on the bell icon.
Hello and welcome to Business Today. I am Siddharth Zarabi and with me today is A. Balasubramanian, the Managing Director and Chief Executive Officer of Aditya Birla Sun Life AMC. He is also the Chairman of the Association of Mutual Funds of India, AMFI. Welcome to the show, Bala. Good to have you with us.
Thanks, Siddharth, for having me part of your show and look forward to having interaction with you.
Let me begin by asking you about the current bull run and the amazing amount of inflows that we are seeing into the market, a period of very high returns, high expectations, big ticket IPOs. How's the overall market looking to you from your standpoint?
I think I look at the market from an angle of that how far the buoyancy in the market will remain. While the markets have been going up and a lot of response also coming for all the IPO that is coming in. Clearly from the penetration in India point of view, clearly the under-penetration in equity remains very, very high. And second, the hope and optimism that still drives the overall sentiment, especially post-pandemic, the active levels coming back to normal, that still remains. And third, of course, is the quarterly numbers for most of the companies, both in global market as well as in India. They have been reporting numbers which are better than the analyst expectations as well. And the last, of course, not the least, is broadly the high liquidity and low interest rate regime and the drive from the government and push the economy to the next level. All of them actually remains in the forefront of forefront in driving the overall sentiment towards equity. Therefore, I would assume that broadly the market will remain buoyant, and despite we see some amount of volatility which is bound to be there, but the overall I think the market trend remain somewhat buoyant from the sentiment point of view.
Bala, we have seen several different trends in the market emerging over the past a year. There is a post-pandemic Indian stock market history that is waiting to be written. I want to take 3 or 4 aspects of that. The first is the major concern in a lot of people, including those who are not participants in the market, about extremely high valuations. Is this a concern according to you?
See, the market always go through the cycle, Siddharth. I think if you look at the market, in my own belief is it goes through 4 phases of cycles. From a despair cycles where everything becomes somewhat dark, then comes to the hope and optimism, and third is the growth phase, and again finally it ends with the optimism phase. I think we go through the cycles every now and then. Whenever the market is being driven on the basis of the liquidity and the lack of opportunities to make money in the other segment of the market, therefore increased level of participation comes. At the same time, the step that is being taken by various government regulators are all pointing towards driving the growth to the level at which India deserves to grow. And all such things generally drive the market sentiment. Therefore, the valuation first increases, it goes up to the level to which probably one will start assuming that valuations are high. The high valuation always backed up by the earnings coming back. I would assume the way, I think once the economy gets opened up, I would assume to most of the companies the result starts coming better. Therefore, it's too early to come to a conclusion that valuation is high, therefore one should get worried about it. At the same time, having seen cycles in the past many number of years in a similar kind of situation, clearly one has to of course keep in mind what kind of quality of companies one buys and whether one is doing speculations or making investments for longer term, and time period for which making the investments have to be taken into account while making the investment decisions, and not to look at the short term benefit that normally market tend to offer. At the same time, it can disappoint the short term as well. But as long as one doesn't get caught in that cycles and stay confident and with reasonably good amount of longer time period of investment, then it should be okay.
Bala, the second major point is the IPO gold rush. It's once again, like you said, a cyclical event. We've seen many IPO booms in the past. The current IPO boom has its own specific characteristics, including one of the largest IPOs by a fintech firm. A lot of new entrants into the market, direct entrants, which is a good thing also in some ways, have participated in this IPO boom. Some have burned their hands in the most recent issue of Paytm. How do you see the IPO boom? Do you expect it to continue? Because we've been hearing some noise about the fact that this may lead to a revisiting on IPO plans of many companies.
See, one of the good things that has happened is that in the last few years, the equity cult in the country has been rising, especially during the pandemic period. I think clearly the equity cult improved. The number of people who have participated in the equity market have been rising. And as you know that Indian investors mostly conservative, fixed deposit oriented investors. Therefore, that cult changing definitely is bringing larger participation in IPOs. Second is, I think Indian market traditionally is known for giving valuation only for the companies that make profit, but not that generates revenue. I think all the companies that you are talking about, all these companies have got, you can call it the new age platforms or e-commerce kind of platforms. I think initial period of say 4 or 5 years, they all in building business and customer base, and then start focusing on profit. You can call it as the initial investment phase and build the business. And once it reaches a certain kind of mass size in terms of customer base, and given the fact that Indian consumer base is very, very large, and all these companies start generating revenue and they start generating profit, and that's the way it goes to cycles. As we have seen in Amazon, for almost 10 years, Amazon did not make money, and they remained on an investment phase for almost 10-15 years period. Netflix globally. Therefore, I think India seems to be getting in that direction. Clearly, of course, one cannot judge the trend on the base of the recent price movements. Of course, in every price movements, there is element of pricing, you fix it, and then the element of the relevance of all these platforms, the rising money would also remain key. The way I see is, as long as the platform is raising money, the company is raising money, the relevance of the companies, relevance of the product, the relevance service that they are offering, if they remain somewhat important, key component of the investment decision making, then probably one has to live with that for some times. At the same time, one should only be careful in terms of the relevance part, which I just mentioned about. If they're not relevant, but it's just a fly-by-night operator raising money, I think one has to be just careful in that space. But I think given the fact that more IPOs are coming, I think it improves the confidence of investing in money in equity. And that cult, I think, changing definitely is bringing more money in the form of resources for companies to rise to the occasion, and therefore to build a new India as we move forward.
Bala, do you expect the trend that we have seen in the past year and a half of direct participants in the market, the record number of demat accounts that have been opened, and parallelly we have also seen growth in the mutual fund industry? Is this expected to continue, or are we seeing some sort of correction that is likely to happen in the bull run that we have seen in the recent past?
See, I think one good thing that has happened, Siddharth, is the learning curve for people have gone up quite significantly. In the sense that investing in the market, initially people used to think are investing in equity or investing in mutual fund schemes, generally considered as a risky investment. And no doubt that it does generate wealth in the long run, but the short term remains uncertain. Nobody can deny that. But having said that, having learned, uplifted the learning curve in the last few years on the basis of understanding, the basis of increase in understanding of investing in the capital market, the very fact that number of demat accounts are opened, this actually is the first step in the right direction. But having said that, I think as we see the market volatility, the learning curve will go up for everyone who has first time invested, who made first time investment in the market, and that is then they'll also realize the difference between the mutual funds investing, which of course a portfolio of diversified investment that they make, versus the individuals when they make in the market with a single stock exposure that you take, 1 or 2 stocks that you take. I think that's where I think people understanding will go up further. I think clearly from a country point of view, given the fact that last almost 15-20 years since the time demat became a mandatory in India, the number of investors who opened demat accounts were very, very less in the last 25 years, which has happened in the last 2 years period. I think pandemic has brought the complete change the way even Indian investors, savers look at investment as an opportunity. I see actually a good change in culture and good change in actually the way they look at equity investing. It's also good change for the mutual funds actually to go to the next level of growth on the back of this change in the customer behavior.
Bala, since you speak about the change in customer behavior, I want to ask you, between direct investment into the market, and I'm talking about the non-sophisticated investor here, the new entrant into the market, the one who perhaps wants to invest 10, 15, 20,000 rupees as a beginner kind of investment directly. How do mutual funds compare with direct investment? I want you to tell those of the investing public who are watching this show, is one better than the other? Is there an element of higher risk in one product? Please expand on that.
Yeah, I think it's a good question, Siddharth. Clearly from the millennials point of view or the first time investor, I think when you go and put your money in the equity market at 20,000 rupees, then naturally you tend to buy one or two stocks what you like, what is being recommended in any other platform through which you are making investment, and that you continue to make money, sometimes lose money. Definitely the diversification risk actually is not there in such investment. The experience at times will be good, that will of course improve your confidence further, therefore you will take more bets. So that's why I think every individual begins their investments in the capital market. Whereas the mutual fund is something, it's actually a solution provider. It has a diversified equity portfolio. The money manager is when you take a risk, it doesn't take a risk in a single sector or single stocks. You actually diversified portfolio representing various the parts of the Indian economy in terms of various sectors. And that's something give a diversified equity portfolio, a diversified portfolio the mutual fund offers. Definitely it reduces the risk, and more investors coming in the same set of schemes, it also reduces the risk, and therefore it actually helps you in providing a longer term very good experience on the investment that you make. I think when you invest direct equity, you will have a lot of volatility, whereas the mutual funds you have to clearly think about the volatility to be least. At the same time, the longer term benefit that gets, I think, will be significantly higher, given the fact that you don't take a single stocks or single sector risk, which otherwise you will end up taking in the direct equity investment in the market.
Would it be a fair question if I asked you whether the mutual fund industry has done a good job in explaining and marketing mutual funds to this new wave of investors? Because when we speak to such investors, one of the feedbacks that we get is they find mutual funds a little difficult to comprehend. There is a plethora of schemes versus they see some stock which is grabbing all the headlines, and they say, listen, this is easier. I am also getting a bit of leverage, so let me gamble. Would it be a question that you would agree with, Bala?
See, one has to of course differentiate that between the speculative bet that you take in equity market versus the you construct a portfolio using the mutual fund portfolio. I think mutual fund is actually a portfolio construction that you make that serves you a purpose for which you are making the investment, or consider your investment for the longer term point of view. I think there are two aspects to that. Therefore, one should not compare these two things and think both are equal. And second, when it comes to the question of mutual funds, given the fact today the industry is managing roughly about 38 lakh crore of size, which today represents close to about 18% or 19% of the banking industry deposit size, which was about few years back only about banking industry deposits about 12% was in mutual funds. Given the fact it's been rising, and also given the fact the number of folios the mutual funds open is now close to about 13 crores of folios which the mutual funds have got today, with a unique customer base of close to about 3 crore unique customer folio that we have. I would assume that since the time the AMFI as a body under the guidance of SEBI came out to the mutual funds as something as an advertisement, clearly I think I have made mutual funds to be part of every household in the country. I would assume the benefit that gets accrued to every investor in the country on the basis of the purpose for which investment being made in the mutual funds, that getting increased recognition among the savers in the country. I would assume, I think as we move forward, it could only gain more and more strength in terms of making every household in the country to have mutual fund unit. But trading in the market, as you rightly pointed out, people can use it for the fun, use it for trying their luck, and also to do a serious investment that will also give you a similar kind of experience that you get in mutual funds. But the question is, how many of them actually fall in which bracket? Only they would know it better. For such people who do not know which bucket where they fall in, then clearly I would advise they be part of the mutual fund and build the longer term portfolio.
One has always tried to explain this whole mutual fund schemes to a lot of investors by saying that it is systematic investment and a planned investment, SIP. I've also said that it needs to be simpler investment. So my question, Bala, is do you think the industry, and you wear two hats including the chairman of the Mutual Fund Association, do you think the industry needs to do more? It is well regulated, but does it need to do more with reducing complexity?
See, I think one of the biggest advantage which I have seen, Siddharth, being part of the Indian mutual fund industry for the last 30 years, the learning curve for mutual fund industry also has been ongoing stuff. In the sense that we all as an industry started the mutual fund schemes more in the form of a product. We have moved away from a product to making it more simplified in categorizing every mutual fund schemes as in the name of large cap, multi cap, and so on and so forth. And second, it's also been divided into two parts, which is basically the actively managed funds, which have got a high focus on all market cap. It comes in a core category of investment. There are schemes which are more thematic in nature, focus on certain segment of the market such as consumption and so on and so forth. You have two type of schemes. At the same time, when the categorization of scheme happened, clearly all of us didn't like it, given the fact that it is taken with the freedom of innovation in coming up with the new product. Clearly from the investor's point of view, it has benefited quite a lot. The categorization of scheme clearly mentioned about which category in which we fall, and clearly bringing an apple-to-apple comparison across all mutual funds, the definition remains the same. Therefore, the learning curve of mutual funds in understanding the investor's requirement and customer behavior and what we need to do better in order to make it more ongoing things from the point of view of increasing the understanding of investors. That's something I take pride for the mutual fund industry, that they keep doing it continuously, and that's something we do it under the guidance of SEBI on the one side, and second, industry as a body come together many times to understand the market feedback and then keep improving upon us, not just individual fund alone. Even as a whole industry, we do that very effectively through various committees that we have in part of the AMFI. I think it's a learning curve is going to be the ongoing things. It's not going to stop. But as long as there is an open mind to learn and then keep doing things different in order to ensure that customer remains at the center of the stage and rest all actually supports the whole ecosystem, that's something would probably give the best results from the customer point of view.
One very quick point. Do you think the industry needs to do more in the non-English language space, because clearly India is a market of multiple languages? You think there's some more work that is needed on that aspect from the industry?
It could be yes, Siddharth, given the fact that since the time we launched this the mutual fund promotion for the whole industry as a whole from the AMFI body from 2016, clearly we have rolled out all the communication about 13 languages. Of course, given the fact that India has got many such languages spoken at different parts of the country, definitely more can be done in that.
Okay.
And second is, I think each languages are different from each other, therefore it makes a lot of sense to do that as well on a continuous basis.
Okay, I want to turn to a hot topic that is being debated, and this is in the context of the change in investment culture that you spoke about, from fixed deposits to equity, with a bit of a risk appetite, and the recent changes that we have seen where the risk appetite seems to have gone up. Of course, it's a open question whether there is greed and desperation also that is part of this culture. But I want you to talk about cryptocurrencies. The key feature, one of the key features really that we have been seeing is a lot of young people investing in crypto, and they've taken to it just as they take to newer technology much easier than people who are more in the age curve. What is happening here? What are your thoughts about the crypto investment mania, if I may use that word?
I think it's an interesting new trend that we are now seeing, not just only in India, globally. I think wherever the easy money is being made, the general tendency for people to actually go and speculate, including youngsters, I think they're doing it. I think it's just worldwide phenomena. Clearly, it's something is an unknown stuff, and historically, we've never seen a currency is being replaced with some kind of Bitcoin kind of model. That has to meet the payment requirements of everyone. Also now became a speculative element where the money is being made on the basis of demand supply without having the proper underlying strength in terms of earnings. But ultimately in the long run, what actually makes successful is the kind of revenue and then earning that you do. That's why we always believe that learned in a tough way that stock price actually is the slave of the earnings, and that is being the case. One has to actually wait and watch as to how this will shape up. Clearly, I think there is a regulators in biting, and how the regulators are going to see it in terms of this as a currency. This is something interesting to watch out. And I would assume as the regulation comes in this place, either in the form of a taxation or in the form of making it as part of the payment mechanism systems, then one has to see actually how it behaves. Clearly, there is this element of speculation, as it always says, where there is a honey, the bee goes there, and that's the way I think people are actually moving towards cryptocurrency. This is something I think one has to just watch out, and how many of them are going to survive, and how many are going to actually come out very clean in this space.
Individually speaking, are you in favor of a complete prohibition or a more nuanced regulated approach where it is perhaps obviously not treated as a currency but as a taxable asset like maybe other commodities?
See, anything which is there is an element of money is being made, or anything which is has got a wider acceptance in the form of participations. Definitely, I think regulation is a must. We have seen in the past that like many kind of platform companies in the country, they all came in. Then, the absence of regulation, the money investors burn the finger. At the end of the day, if investors have to be protected, whichever way it is, either in the form of losing money or making money in the form of speculation, it actually leads to the regulatory requirement for such kind of product. I think taxation is a function of the regulation. I think as the regulation comes, the taxation also will follow. I think that's something I think one has to probably have a deep understanding of this. Ultimately, I think each of the government probably have to take a call as to whether at all these kind of instruments have to be recognized, and given the fact that currency, the ownership with the central banks globally, therefore how does it differ from that, and that's something once it's accepted or maybe differentiated, the regulatory framework coming in with the proper taxation structure will bring in the right level of balance on this.
My very final question, and a quick one, the structural shift that we are seeing as far as the mutual fund industry is concerned, how do you expect the next 3-4 months to pan out in terms of inflows and investor participation?
See, clearly I would assume the way thing we have seen the sentiment improving, especially with respect to the flows, the last almost 8 months. I think from December onwards, industry has been seeing inflows, and investors' experience, I think post-pandemic, after a significant fall, the investors' experience also, given the fact the market remained buoyant, have also improved quite significantly on their investments in SIP. And also given the fact the interest rate is remaining low at the range of about 4 to 5%, clearly it makes sense actually for investors to look at clearly building a portfolio through the mutual fund, the longer term purpose for which they could consider investing. I would assume in the next 4-5 months, on the basis of the recent that I am saying, as the market sees some kind of corrections, it turns volatile, volatility increases. I think clearly I would assume the inflows into the equity mutual fund schemes, clearly with the assumption of longer term investment. In fact, people already started asking about not just only SIP alone, even systematic transfer plan also people already started talking about it for investing in the equity. People already started talking about balance advantage fund as one of the category which actually takes care of the volatility in the equity market. That also now is became one of the expectation coming from investors. Therefore, I would assume change in investor sentiment would only improve the flows as we move forward.
Absolutely, Bala, and all we can say as we end this conversation with you is to all those who are watching and those who are invested, save, invest, prosper, stay long and stay safe as far as your money is concerned. Bala, as always, a pleasure having you with us on the show today. Thank you very much for your time, and to you, if you've been watching, thank you very much.
If you like the video, do like, comment, share and subscribe.